A lot of you asked me for an update on Lululemon stock. The stock is down more than 42% year to date. Absolutely insane. $291. A lot of you know Lululemon. You're familiar with the brand. And a lot of those retailers have been crashing. Nike has been crashing too. A lot of the apparel stocks, even Ulta Beauty, it has started to recover. That's very encouraging. I talked about it before. And a lot of those stocks are just suffering. And this is normally the best time to be buying them when it's not easy to buy them, which I believe is in 2024. Now for Lululemon, last earnings report wasn't too bad at all. They had a pretty good beat, 254 versus 238, very good beat. Same thing on revenues. It was a slight beat, but it was very good so far. It's just been crazy. We have a slow economy. People are saying we're in a recession, yet Lululemon is running out of color assortments, which was too narrow on leggings. I mean, people are still paying $100, $150 for leggings. And so the recession is not everywhere, I could say. And they ran out of stock. I mean, it's crazy. So there's a lot of demands for their products. Even though you have competition, maybe from Temu selling stuff for $5 in other places, but Lululemon attracts more people that value quality, that they rather pay up for something and for it to last a long time, they have to buy every 6 months or every 3 months a different pair of leggings or a different pair of pants. And this is the kind of customers that Lululemon is attracting, and it's retaining them, and that does make a lot of sense. Now, for the companies, they have a goal which is called the power of three, which is to double men's, double digital, and quadruple international expansion and expand into international markets. And this is what they've been working on. This is their formula to keep growing revenues. And they made a lot of progress on it in terms of product innovation. Women's revenue is up 10%, men's revenue is up 15%. Very interesting stuff. In terms of comparable sales, 7%. A lot of the retailers, they can't even put up 3 and 4%. Nike, or I should say Lululemon, is putting up 7%, over 11% EPS growth, 10% revenue growth. Very good, very encouraging. I just love it. In terms of market expansion, America's up 3% in revenues, international up 35%. So their goal is mostly working, and they've been working on it, expanding more, and Lululemon is getting more and more popular internationally. And this is very good stuff for the company. As if you want to call it, Lululemon is, you could say, a high quality company. They have high return on capital, around 38% to 40%. Very good stuff. The company has been growing earnings per share a lot, from 86 cents per share to 33 cents. I mean, this is massive, massive growth on Lululemon. And it's down 44%. That's very interesting. Very interesting stock, I have to say. And for Outlook also wasn't too bad. They still expect 9 to 10% growth in terms of revenues. Earnings per share growth, I think, will likely be 11 to 12%. This is very good in this environment where you have a lot of the consumers struggling, especially inside the United States. Maybe some places in China, Lululemon is still putting up huge growth, or especially in Japan. But in terms of the United States and the Americas in general, it's been slower. So 9 to 10% is not bad at all, in my opinion. And the company has a good balance sheet. They have $1.9 billion of cash and cash equivalents. And in terms of that, they don't have much debt. I mean, they have some income liabilities and tax liabilities, nothing crazy. So it's a good balance sheet, kind of like Ulta Beauty. They also do buy back a lot of stock and do many things. So, I mean, I like Lululemon. It's looking very, very good. If I look at the PE ratio of the company, where it's trading at 19.8 times earnings. This is the lowest it has traded at over the last 10 years. The lowest was 19.6. Now it's at 19.8. So if you look at a historical basis, you're getting a pretty good deal on Lululemon. I mean, that's what it would seem like it. But you also have to keep in mind that Lululemon was a growth company, you could say. It was growing massively in terms of revenues, 40%, 30%, 20%, and it's expected to go between 11 to 9% over the next 5 years. And this is very normal. And this is one of the reasons why Lululemon is now trading at 19 times. And I think some of it is justified, but most of it isn't really justified, especially if you look at the other places in the market. Again, I don't want to compare it to Nike, but this is another one. Yes, Nike has much more branding awareness and all that stuff, but Lululemon has many more things too. and it does have brand awareness, and it's trading close to 20 times. It's growing faster than Nike, like 3 times faster than Nike, and it has higher margins than Nike, high return on capital. This is why, I mean, Nike. I'm not trying to hate on it, but there's so many better stocks if from a valuation standpoint. I mean, you could compare Nike to Apple and say Nike is undervalued because Apple is trading at 35 times with no growth. I mean, maybe, but if I compare it to other apparel stuff, Nike looks expensive on a relative basis, and Lululemon looks very, very good at this price. In terms of my valuation model, I put up 10% growth to 2028, which is actually 2029, but I adjusted it. So it's around 10% fiscal year 2029, which I put in 2028. 10%, I think 10% is very fair after the company growing 11, 18, 20%, expected 9 to 11. So I think 10% is fair. Net income margin is 16.7%. I kept it at 16.7%. The company has higher margins because they outsource a lot of the production. It's not a vertically integrated company. They don't do the stuff and they don't produce the stuff themselves. They outsource it to, I think, the Philippines and many different places around the world to save on labor and save on them having to rent their own stuff. And I could be a potential risk in the future if something happened with supply chain. But for now, 60.7% net income margins. Now the PE ratio is around 20 times, which I put in 19 times. And I would not be surprised if it gets back to 25 times. For me, in terms of Lululemon's growth and the brand and how they're expanding in many different things and their international growth is 35%. So once the United States picks up, the revenue growth could be much, much higher than 10%. It could be 15, 17%. I wouldn't be surprised. If they can keep growing internationally, 30 to 35%, and grow maybe 5 to 8% in the United States instead of 1 to 2%, that's massive growth for the company. So I wouldn't really be shocked if Lululemon gets back to 25 times earnings. And I put in a 2% shareholder yield, which means if the company puts up 2% to buy back stock, this is what they've been putting up, 1 to 2%. In total, I got 88% on the upside, or around a 14.2% CAGR over the next 5 years. Not bad at all. Now, if you want to buy Lululemon, to double your money over the next 5 years, which is what I look for, doubles every 5 years, you would have to buy it around 285, which is around a 2% decline from here. It's not really far at all. So for the balance sheet and for the growth, and for me using a conservative estimate, I mean, I wouldn't be shocked if Lululemon grows more than 10%. I think Lululemon stock is a buy at this price, but you have to keep in mind that, I'm going to tell you why I don't own Lululemon. I don't really like the apparel stocks so much. I don't like stocks like Nike. I don't like stocks like Lululemon. Ulta Beauty was an exception for me, but I don't really like to invest in this space because it's extremely hard to predict what kind of preferences the consumers are going to have. So maybe someone on TikTok goes viral wearing some kind of different pants or different leggings, different stuff, and then everyone's following this girl, everyone or a guy, or everyone wants to be like them and wants to buy whatever they're buying to do their own TikToks or whatever. And you could have a new trend emerge out of nowhere. Out of nowhere. I mean, people get popular just within 1 second videos. We've seen what's been happening recently. So if something just happens out of nowhere in terms of a new trend, Lululemon is going to suffer, or Nike is going to suffer, or even Crocs could potentially suffer. Although Crocs is a pretty interesting one. I talked about it before. Amazing company. But again, this is what I'm trying to say is the reason why I don't invest in them is because it's hard to predict consumer preferences. What's going to be the next trend? If it's still going to be Lululemon, or maybe people wear something new and everyone wants to copy them. This is what we have, now in 2024. So it's very unpredictable. And if sales end up being lower, and Lululemon trades at 20 times earnings, just where it is now, so no multiple expansion. In this case, you're looking at 26% downside to around 231 on Lululemon. But I don't think this is going to happen. And the company has a good balance sheet, and I like it over here. So I think the stock is a buy. And this is not financial advice, just my opinion on Lululemon and the apparels and consumer preferences in general. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.